All right, you may be seated. Good evening to you once again, and welcome to this Financial Inclusion Town Hall meeting here at the Antioch Baptist Church in St. Kitts and Nevis. We want to welcome especially those who are viewing online on the various media outlets across the Currency Union, as well as those listening on the radio. As we understand, we also have a radio audience. This is going to be a very interactive session. We intend to interact with those here in the room, those who are listening, those who are watching online. And so we'll be utilizing the various technological tools available to us to do that. And so I'll be giving you some instructions later on how to do that. I'm Andre Huey. I'll be your presenter for this evening, your moderator for this evening. And we have a very power-packed panel with us this evening, which I'm going to introduce to you shortly. I would like to welcome, again, those in the room and to those on our panel. Before I get into the formal introductions, of course, why are we here? What is the purpose of this Financial Inclusion Town Hall meeting? Of course, we've been hearing from time to time in the news, and of course from our personal experience, I'm sure some of us would have had some difficulty from time to time opening a bank account. You know, you sometimes go to the bank and I guess the only thing left for them to ask you for is house and land, or title, or your blood type. It's sometimes quite restrictive, and I'm sure your experience hasn't always been pleasant. But thankfully, the Eastern Caribbean Central Bank, in collaboration with financial institutions across the Currency Union, have decided to launch a joint initiative to improve financial inclusion and to simplify the process of opening a bank account. The effort addresses long-standing issues with access to banking services in the region. The core of this strategy is the Basic Bank Account, also known as the ECCU First Step Savings Account, introduced in December 2024 and rolled out in April 2025. This account is designed for the unbanked and undeserved across the ECCU. We want to give everyone an opportunity to be able to save and to use the banking institutions across the Currency Union to do that. And so this session, this afternoon and this evening, is to give you an opportunity to interact with members of the panel, to also get some insights into this strategy and basically how you can be part of this, and that everyone across the Currency Union can be included in this process. So, without any further delay, let me introduce to you our power-packed panel for this evening. I have at my immediate left the Governor of the Eastern Caribbean Central Bank, Mr. Timothy N.J. Antoine. Also with us, Managing Director of the Bank of St. Lucia, Mr. Rolf Phillips, Managing Director of the Bank of St. Lucia and President of the Eastern Caribbean Currency Union Bankers Association. We also have Mrs. Norlan Gabrielle Boyer. I had that right? Good. All right, and she is the Assistant General Manager of the First Citizens Investment Services Limited and Chairman of the Ease of Account Working Group. Next to her is Mr. Ron Leon. He is the Senior Manager of Corporate Services, Republic Bank, EC Limited, Eastern Caribbean Limited, and co-chair of the Ease of Account Working Group. And finally, to my far left, Mrs. Livia Burton Mark, Deputy Director of the Eastern Caribbean Central Bank and member of the Ease of Account Working Group. Gentlemen and ladies, good evening. All right, so Governor, I think we'll start with you. Before we get to that, actually, I should mention this. And as I indicated earlier, this is going to be a very interactive session. And we're going to be using the technology that's available to us. Now, you will notice not too shortly, or of course, as you entered the building, those who are in the building, you saw some signs that had a barcode. Now, essentially, a QR code rather, not barcode. And that QR code, for those who are so inclined, you may scan that QR code, and you will be taken to various polls that we'll be having tonight. So throughout the session, we're going to be having polls that you will be able to interact with us. So this barcode is going to be here, all right? So if you have your smartphones, you will be able to scan the QR code. The internet access is also available for those persons who don't have data services. You can access the internet here in the building and be able to scan the QR code. And with that, you'll be able to get the poll questions, and you can respond to that. And throughout the night, we'll be reading the various responses to the questions. For those who are listening or watching online or listening on your radio, you can visit menti.com, which is the website that we'll be using for the poll tonight. That's meti.com. And you will enter the following code, or the code that you're seeing here for those who are watching. It's 22584492. 22584492. So you enter that code, you go to menti.com, you enter that code, and you'll be able to participate in the polling that will be happening this evening. And again, we cherish and we really value your responses and your interaction. So we really expect you and we want you to respond to the questions on the various polls. Like I said, you'll have different questions throughout the night. The first question tonight, and it's a multiple choice, so we're going back to school. Which of the following do you believe is the biggest barrier to opening a bank account? Lack of proper identification, lack of required documentation, complex application process, minimum balance requirements, lack of trust in banks, or limited access to bank branches or technology. So all of that is laid out for you in the first question, and you can respond. And like throughout the evening, we'll be giving the results of those polls and interacting with that with our panel. So that's your first question for tonight. So again, you just scan the barcode. If you're listening or watching online, you can do so, or you can go to menti.com and put in the code 22584492. All right, so let's get into the discussion for this evening, and we'll start with the Governor Antoine. Mr. Antoine, your first question for this evening. So we have inquired from members of the public about the significant barriers they face when trying to open a bank account, barriers that hinder financial inclusion. Can you provide an overview of what financial inclusion means for the ECCU and why the ECCB has made it a priority to promote financial inclusion and improve the ease of opening bank accounts across the currency union?
Right, so thank you, Andre, and let me say good evening. I'm going to say good evening. I think it's just past afternoon. Good evening to my fellow panelists and to those in the room and those who are joining us online across the currency union and around the world. It's a pleasure to be able to have this town hall with you this evening to address a very important issue, that is the ease or lack of ease of opening bank accounts. Now, Andre, you asked the question, what is financial inclusion? Financial inclusion simply is defined as access to financial services such as banking, payments, credit, and insurance. But more than that, it is not just access. It is access that is affordable, that is transparent, and that is fair. So it is not just the what, it is also the how. I'm going somewhere with this. At ECCB, we truly believe that the financial system should work for all except illicit actors. I want to repeat that. At the Eastern Caribbean Central Bank, we truly believe that the financial system ought to work for everyone except bad actors. And when I say bad actors, I'm referring to persons who may attempt to misuse the financial system for fraud, money laundering, terrorist financing, proliferation financing, and the like. So, bottom line for our central bank, we believe access for all except illicit actors. That's a fundamental premise for our involvement in this area of financial inclusion. But what is driving the central bank on this matter? First, it's our mission. The mission of the ECCB is to advance the good of the people of our currency union through monetary and financial stability and growth and development. And I like to say it this way, to advance the good of the people of the currency union where they not only strive, but thrive and realize their God-given potential. So for us, we have identified payments, modernization, and financial inclusion as a strategic priority of our central bank. And that is why we are so focused on this. But there's more. You alluded to it in your opening. As we move around the currency union, as I talk to people at multiple levels, cabinets, parliamentarians, man in the street, business folks, I hear the same cry and complaint. Governor, it is too difficult to open a bank account in our region. And what is more, I am often told and verily believe that it is easier to open a bank account in the United States, for example, than it is to open a bank account in the Eastern Caribbean, or in the Caribbean for that matter. That, Andre, is not an acceptable state of affairs. We have to address that, we have to change that. So that's the problem that we are seeking to address. And so, having seen the problem, what do we do? There's something we challenge ourselves at the central bank every day. When you see an issue, you have a choice: curse darkness or light a candle. And we always choose to light candles. So, what did we do? Having heard all of these cries and complaints, we approached the ECCU Bankers Association. The President Rolf is here and he will speak shortly, and said, let us work together to address this problem facing real people, because it's a real problem. And that is how we came together and begun the work which you will hear about tonight of the ease of opening a bank account. And I'm not going to say too much because those who will come after me will lay it out in detail. But that is the premise for what we now call the basic bank account and what we prefer to style as the ECCU First Step Savings Account. And you and I know that the journey of 1,000 miles begins with the first step. Yep. And so the first step means access to savings, then credit, maybe business, pursuit of your dreams. But it has to start with your inclusion, not exclusion from the financial system. One more thing. 2 years ago, we did a financial inclusion and literacy survey in the Eastern Caribbean Currency Union for the first time. And very interesting findings, one of which was that about 86% of our citizens have some account, be it a bank account or credit union, but about 14% do not have. And when asked, why don't you have a bank account? The main reason was that it is too difficult. Documentation and issues. I might be giving you a hint for the question, but you will answer that question. And so, to sum it up, we truly believe if our region has to grow, if it has to thrive, if we have to pursue a big push, which is double the size of our economy over the next decade, everybody has to be included in the financial system, except bad actors. And that is why we are here tonight. So I want to conclude by saying I'm grateful to the ECCU Bankers Association, my colleagues, and my colleague Levia for the work they've done for the last year or two on this issue in partnership. And to say I'm looking forward to a very energizing and hopefully informative discussion.
Thank you very much. Thank you very much, Governor. And yes, indeed, we are looking forward to a very engaging discussion. I'm going to come back to you on something else, but I'll give Mr. Phillips the opportunity to speak from the perspective of the financial institutions, because yes, we hear about the challenges of opening an account and from the side of the customer, the person who wants to open an account. But from the banker's perspective, what are some of the things that have to be taken into consideration that sort of makes it difficult for the customer to open an account?
And thank you, and certainly good evening to all and to all our public online who are listening in on the radio. Just to provide a bit of context as to who the ECCU Bankers Association is, we are an umbrella body representing all the banking associations in each of the 8 countries of our currency union. And likewise, we have membership of almost all the licensed financial institutions in the ECCU. And like the Eastern Caribbean Central Bank, we are also committed to continuing to improve the access to financial services and access to quality financial services across the currency union. As a matter of fact, we have continued to collaborate with the central bank to improve access to financial services. Many people are not aware of the clearinghouse, automated clearinghouse for processing checks and the central processing of credit card payment transactions, all of which were collaborative efforts between the banks in the ECCU and the central bank. So this is our first effort, however, that is directly customer-facing to impact how customers access to financial services and access to having a bank account across the ECCU. I should say, however, that banks individually have been continually making efforts to try to make it easier for customers to open bank accounts. But I'm sure you would appreciate that if every bank is working on this individually or as part of a local association, they are interpreting legislation and saying, okay, how far can we go and what exactly can we do and how do we put these arrangements in place that customers can have an easier time. And some customers are in fact benefiting already or have benefited over the last few years from an easier process. But where the banks have had a huge difficulty is doing that in a consistent manner, because each bank is interpreting the legislation, seeing how far they can go, and deciding which customers qualify for which types of accounts with them. So a customer could go from one bank to the next, same customer, and have an entirely different experience where one bank might ask him for one piece of identification and proof of address, and he goes to another bank and they ask him for two pieces of identification and two pieces of two address confirmations and a job letter before he can open a bank account. So very difficult for the banks themselves or the local associations to provide a real consistent approach that says, okay, how do we identify that 14% of customers who are having difficulty accessing financial services, and how do we create a consistent process where, regardless of where they go to, which bank or licensed financial institution they go to in the currency union, they know they can have access to a first step account that gives them an entry point into the financial system and financial inclusion. So we have been very happy to partner with the central bank over, I think, the last about 18 months working, and it's taken a lot of work to get all the banks on the same page to understand exactly what we can do and where the central bank needed to provide help to the financial institutions, where we had differences, for example, between local legislation in country as against overarching legislation that affects all the territories consistently. And we worked assiduously over the last 18 months to deal with all of those issues and to come up with a framework where we could create this first step account, which is going to make it easy for every single citizen in the ECCU, except bad actors, as the governor said, to have access to financial services and can start from there and then move on to more access to credit, to wealth creation, as they understand the way the financial services work and how it can benefit them. So we are really, really pleased to be here today to announce that several banks, not all banks have launched the product as yet, but we are adding banks in every country every couple of months, and we expect over the next 3 to 4 months that every single bank that you go into will have a first step account available where citizens of the ECCU in any country can open accounts on the same basis that you can with any other bank across the ECCU.
All right, thank you very much, Mr. Phillips, and we will talk more about that later on in terms of what exactly the banks are required to do. In the meantime, I think we're at the point where we should be able to get the results of the first poll. So if we can get that on screen, then we can have an idea. And again, just to remind our listeners what that question was. That's right there. Which of the following do you believe is the biggest barrier to opening an account? Majority of persons of the votes came in said complex application process. So right away, Mr. Philip, you're seeing that this is one of the reasons why a lot of people, at least based on this poll, don't open an account. The second highest, we had 8 votes on this one, now it's 9, lack of required documentation. And that seems to be also a big hindrance for persons opening bank accounts. All right, so we're going to continue, and let me get you now the second poll. As I tell you, this is going to be interactive, and we'll give you the opportunity for those in the room as well to ask questions. You will have that opportunity. There are microphones available, so we'll give you that opportunity to ask questions as well, because this is about interacting. It's not just about the panel, members of the panel just speaking, but we want you to hear your voice, because your voice is very important in this very crucial process. So we're now at the second poll question, and that question is, On a scale of 1 to 5, with 5 being the highest, 5 being the worst, how has the difficulty to open a bank account adversely impacted you or your business? On a scale of 1 to 5, with 5 being the worst, how has the difficulty to open a bank account adversely impacted you or your business? And again, for persons who are listening via the radio or online, you can either scan the QR code or you can visit menti.com and put in the following, input the following code, 22584492. 22584492, and you'll be able to participate in the polling that's happening here as we continue. All right, so we've heard from the governor, we've heard from the Bankers Association. We're now going to be hearing from the other panelists tonight, and we have with us Mrs. Norland Gabrielle Boyer. She's the Assistant General Manager of First Citizens Investment Services Limited and Chairman of the Ease of Account Working Group. Good evening.
Good evening, Andre.
Yes. All right, so you are crucial in the developing of, or at least the working group, crucial in developing the ECCU's roadmap to ease of account opening. Now, maybe you could share with us what this really is and what are the objectives and what are we expected to achieve from the roadmap?
Sure. Good night, Governor. Good night to the other members of the panel. Good night to those of you in attendance here with us. Good night to those of you listening on radio and our viewers out there. Pleasant good night to all. So about 2003, to the latter end of 2003, the Bankers Association would have come up with a proposal for simplified due diligence or ease of account opening. And the genesis for that proposal was all of the pain points expressed by customers around the ability to open a bank account. The last poll, or the first poll, showed that the process itself is the biggest incident of why folks can't access an account. So based on that feedback, the Bankers Association said, okay, we need to do something about this. What can we do about this? And they approached the central bank with this proposal. Coming out of that, a working group was convened, and that working group was made up not just of regulators, not just of bankers, but a proper, fully formed collaborative group that would take into account all of the regulatory frameworks that we would need to comply with, as well as hear the needs of the bankers or the licensed financial institutions who are front and center with the customers expressing all of the issues that they were having opening bank accounts. Of course, it doesn't sound as if it was just the bankers hearing that, because as the governor has indicated in his opening remarks, he has heard the complaints as well. So clearly something needed to be done. The mandate given to the committee was this, with a very short window of time, I must admit as well. Come up with a roadmap for easing the account opening process across the currency union. I think at this point, I would like to recognize the other members of the committee, because while I chaired that committee, there was a lot of work that went into coming up with the roadmap. And at this point, I would like to recognize Ron Leon, and he's also on the panel, but he's the co-chair of the working committee. Levia Burton Mark, also a member of that working committee. We also have Nyasha Brown, we have Delia Compton, Hugh Henry, Aishon James, and Patrickson Carbon. These are all the members that worked on this roadmap on the working group committee. So the roadmap that the committee put forward was 3 points. There were 3 points on the roadmap. There was what can be done immediately was the first question. Is there anything that can be done immediately? The second point was in the short to medium term, what are the steps that we should take to alleviate this problem? And then the third milestone on that roadmap was, in the longer term instance, what could we do to ensure that going forward, so the first 2 things were the immediate emergency stopgap measures. It's as if you have a bleeding cut on your arm and you need to immediately bandage and fix that problem. So that's how it was addressed. What are we going to do right now? What are we going to do in the short to medium term? And then what are we going to do in the longer term? So the immediate milestone was there was a body of work undertaken by the regulatory body, which was looking at all of the existing legislation across the currency union. Yes, we are part of a currency union, but we have individual legislation that is not harmonized, and that presents one of the biggest challenges. And so the body of work undertook to review all of the individual legislation to determine, is there the ability to apply simplified due diligence immediately? Looking at that body of work, it was determined, and that was done by the ECCB, it was determined that each island, and under each island's legislation, there was the ability to apply some form of simplified due diligence. So the first milestone from the committee was that each individual LFI could, based on their risk assessments, apply simplified due diligence. In order to do so, they would have to document this process, as well as share that with their regulator. Okay, so that was step number one. That was the immediate stop in the bleeding. You can, here is how you can, this is what you need to do. The second step was looking at how can we make and how can we foster and further the goals of financial inclusion and allow for others to access the legitimate financial system. And that's where a basic payment account was put forward as milestone 2. That basic payment account is what we now know as the ECCB first step account. Right. So this basic payment account is premised on a couple things. Generally, when we are trying to onboard a customer, a large percentage of what we are doing and spending our time on is ensuring that we're doing the due diligence to ensure that they can legitimately enter the system. So we're performing the due diligence on the individual. What the basic payments account does instead is that it says this product is considered low risk. Why is this product low risk? Because there are parameters around which it functions. And within those parameters, we can then decide to apply simplified due diligence to individuals because we are not measuring the risk per se of the individual, but the product itself is considered low risk. So that was milestone 2. Short to medium term. So if we started in October 2023, we are here now in June 2025. In the longer term, and I think this is where most of the financial institutions would have wanted to see where we have this uniform approach for applying simplified due diligence. That we understand is the future. But in order to get to the future, there is a body of work that needs to be undertaken so that we could understand and who are these groups to whom simplified due diligence should be applied. And since that work cannot be done immediately or in the short term, that is the longer term milestone of the roadmap.
All right. Just for clarity, how many banks, if you can say, so far across the currency union have already implemented the basic bank account? About six.
Yeah.
Across the ECCU.
Yeah, but that encompasses multi-country banks. So potentially you have maybe about 10 to 12, I would say. Yeah. Yeah.
Yeah. Okay. And just for clarity, what would be the main difference between that bank account and a bank account that would require more documentation to open?
Okay, so the basic bank account is premised on this. One form of identification to open the account. You cannot have another bank account already. This has to be your first bank account. It's restricted in your annual deposit, so $3,000 per month or $36,000 annually. It can be jointly or singly. It is interest bearing. It attracts no charges. You can use it for ATM, point of sale, and other types of transactional activities.
Okay, all right. So a lot of the trimmings and the stuff that you normally get for a major bank account, but much easier to open.
Yeah, you're not required to provide a job letter or proof of income as you would do for most other types of accounts. So it is really indeed quite simple. You go to your bank, you request a first step account, provide your one piece of identification, and your account is established.
Wow, I think that's
and you get a debit card.
A debit card that you can use online as well for online transactions.
Yeah.
Wow, that's fantastic. I think that's worthy of a round of applause for the ECCB and the Banking Association for this initiative.
Well, that applause isn't sung if you got the message, so we have to take it again. No minimum balances.
Yes.
Do you remember a few years ago when a particular bank who shall remain nameless, not on this panel, said you must have a certain amount to keep that account open, and they were charging you a monthly fee for that? Do you know, you remember that? Right, we are addressing this with the first step. Simplified due diligence, one piece of ID, not two. No minimum balances. If you are living with your parents, a letter suffices. No proof of address, utility bill that you can't find. Interest bearing. Whatever you put in that account earns interest. And you just heard from the president the debit card access and so on. No charges.
No charges.
No charges. So you get an interest, no charges. That's a real first step. Give the Bankers Association a round of applause.
All right, so we're now going to go to Mr. Ron Leon. He's the co-chair of the Ease of Account Working Group. And you're going to tell us a little bit more about this account. And I think some of it was already said. But in terms of the implementation and to get to this stage, could you share the experience that you've had working with the banks and getting to this stage? I'm sure a lot was involved, a lot of work behind the scenes to get to this stage for us to have this bank account.
Sure, I'll be happy to do that. But good evening to everyone listening. Good evening to everybody here at Antioch Baptist Church. Good evening to the panel. Good evening, Governor. I think for me to really give the public a true representation of our experience in shaping this product, we owe you an explanation. And I'll tell you why I say that. We owe you an explanation because for many years you have come to the banking hall, you've sat down in front of an officer and they've told you, I am sorry, I can't do this. That maybe they may have said that is the policy, but you don't understand. And we owe you a bit of an explanation. And with that, you will get and understand our experience. So let me just break it down for you so you understand why the banks may have decided that this was absolutely necessary at some point. And as somebody who's responsible in my institution for putting some of these policies in place, I have to provide that context. And I have to put that out there. I see Nolan laughing. So, I could say there are two things that we try to do when we look at the risk that is associated with bringing in a new customer. And just to simplify this for your understanding, we try to ensure that we're meeting the expectation and the requirements of legislation. And we also try to ensure we're meeting the expectation and sometimes requirements of international standards or bodies across our waters. And that's a very big one. And I think we've spoken about some of the things that we have here, and we were able to get past legislation, but sometimes it's more than the legislation. Quite often, unfortunately, it's a lot more than the legislation. It's the bank saying, I need to ensure I am good because I need to continue business with my international partners, my correspondent banks. We have partners that are strategic to the business that we cannot afford to lose. And because of that, we would have decided that we need to put these policies and procedures in place to ensure that we can continue that business. And in retrospect, maybe a bit self-righteous, but we said this is for the betterment of everybody because we want to make sure the financial sector is secure and we continue to operate to provide these services. But at what cost, really? So, in doing that, going back to account opening, we would have decided, some banks, more than others, have said, ID is absolutely required, and verification of that ID is more so required. So you don't only need one form of ID, you need a second form. Because our interpretation is that you give that form of ID, but I also need to verify it. So I want a second one to make sure that first ID matches up to the second ID. Was that directly from legislation? I think we can now say no. But the banks felt it was necessary. Why? Because we wanted to make sure that we were good in both of these cases. Proof of address, similarly, there were some expectations on ensuring that we have a proof of address for every single person, whether you were from an international space, whether you're an expat, whether you're a resident, that proof of address has to be there. Also, we got to a point, and more recently than latter, we started saying we must have a very detailed understanding of the income that you bring in. And that goes back to the governor's first point in that we don't want to encourage bad actors. So of course, reasonably so, the bank will say, I want to understand where your money is coming from. That's reasonable, right? I think everybody in the hall could agree that. I want to understand where your money is from because I don't want to encourage bad actors. But with the help of the ECCB, and by bringing these minds together, this working group, the Bankers Association, we were able to come to some understanding which brought us to this resolution. Understandings that we don't necessarily have to verify that ID in the way that we thought we had to. Especially when we're speaking about residents, persons who live, work, support the economies that we operate in. Why is it necessary to get that granular with those persons? Persons who really don't pose much of a risk to us when they come to open an account. And if we understand that these persons actually live, work, and support our economies, do we have to, after being provided with that ID, ask them to go to their mother, to their grandmother, to their spouse to get a proof of address so that we could believe that they actually do reside in this currency union and then they can avail of an account? And again, with the help of the ECCB, they've done some really good work, the Ease of Account Opening Group. We've been able to comb the legislation. We've been able to look at international standards and expectations, and we're able to come with that resolution. And that's where we get with the experience. The experience was absolutely wonderful. Challenging because of these hurdles, but wonderful because it showed us that we could collaborate. We could come together with one common goal, and we've done it in the past, and I think we'll continue to do so, with one common goal, which is to ease account opening for everybody in this region. We were able to comb through legislation, something that I'm sure a lot of bankers had not done before, again with the help of the experts at the ECCB. And we were able to understand what is really required, which is now where we're at. One form of ID to open an account. That is an amazing resolution that we have between the banks and the Eastern Caribbean Central Bank. That in itself was really the outlook of it all, having that collaborative approach. Then I can see we started to look a little further, and that's where the roadmap came in. And we said we need to do more, and we need to push more, because we are catering, because of this 36,000 per annum. Some may say, I don't necessarily want to open a basic bank account or first step account. I already have an account, but I may want to avail myself of other services, and it's still difficult. So the working group is not done. That's to tell everybody. There are still things that we have to do. And we're looking at, and Nolan has spoken about it already, simplified due diligence. Who do we really say we need to get everything from your DNA test to your blood type 4? And who do we say we have enough information on you? Here you go. You deserve this service. So we are there. This is the point that we're at. But we're happy for this milestone. And we call it the first step for different reasons. First step for the region, and first step for persons coming into the financial sector. Definitely a rewarding experience.
All right, a round of applause for Mr. Leon and for the rest of the panel as well. And so you no longer have to hide your money under your mattress.
You should have never had to do that. But you don't, not at all.
All right. It's not bearing interest there. All right. Before we continue, we're going to go to the results of the second poll. So again, we have the poll. These questions are rolling as we come along, as we go throughout the proceedings. And so the question was, on a scale of 1 to 5, with 5 being the worst, how has the difficulty to open a bank account adversely impacted you or your business? And it is not a surprise. Moderately difficult is the highest in terms of the results on the poll. So that's number 3. So it's close to extremely difficult, which would have been 5. But it has certainly, and people are saying it has moderately adversely affected them and their business. So we're kind of halfway at the halfway point. Slightly difficult, just got another one. All right. So yes, certainly this, and as you could see, Governor, this is probably one of the reasons why, especially small businesses may have some difficulty sometimes accessing certain services because they're not banked for the most part. So a lot of the informal sector, they just go based on cash. So, all right, so I guess this will certainly, by the way, does this apply also to businesses or is it just individuals, the basic bank account? Yes. Applies to business as well. Okay, so small business owners could also open. Okay, great, fantastic.
Just want to be clear, all means all. All means all.
Okay, all, so not just small.
Right?
Okay, gotcha.
Everybody.
Everybody.
Whosoever will may come.
All right. Microphone, all right. All right, so we're getting ready for our, the third poll. Let me introduce the third poll before we continue. And we do have a testimony that we're going to be sharing as well. So I think we'll probably go to that, and then we'll go to the third poll. So the testimonial from someone who would have had experience with the basic bank account.
Mr. Knights, this is the first time you're trying to open a bank account?
Yes, please.
Can you tell us a little bit about your first reaction when you heard about the basic bank account?
Come and save some money to buy something later in the future.
Okay. And how was your experience while opening the account?
It was good.
It was easy?
Yeah.
Yeah.
Well, coming on just, you don't have to go through the whole long procedure and that kind of thing.
What does having an account, this account, mean for you and your future?
More responsibility, and in the future, by the end of the day, you get some money saved up in the bank.
So what would you say to someone, your friends who just finished school like you, what would you say to them about coming and opening an account?
So yeah, like you could go at the bank and probably start out the same account like where I started before and get to save some money so then later when you grow older, you get some money in the bank.
So we are at the point where we're going to our third poll, and I will also take the opportunity as well to give persons in the audience here at the Antioch Baptist Church an opportunity to pose a question or two to the panel on what you'd have heard so far, just to engage you and to get your feedback on the discussion points and this important topic. So before I do that, let's introduce the third poll. The third poll question, if you could put that up on screen. What is your biggest concern with the banking sector? What is your biggest concern with the banking sector? And the answers: request for documentation, customer service, fees and charges, or access to credit. And you can do that poll via the QR code. And for those, again, listening or watching online, you go to menti.com and you input the code 2258-4492. 2258-4492, and you can participate in the poll question for this evening, the third poll. All right, so I'm going to give some persons maybe a couple of questions here in the room. We'll have a section for question and answer. There's a microphone right here, or right over there. So you can just walk up to the microphone and pose your question, and then we will have members of the panel to respond.
Good evening. Thank you, Mr. Moderator, and thank you, Governor Antoine, and your distinguished panel. I think this is very good that we're learning in terms of financial literacy a bit more about this banking. But as I am listening, I have some concerns. And I know what you're saying reminds me of the penny bank in days gone by, which is how National Bank started. And it's now, I think, the largest indigenous bank here in the OECS area. But when I'm listening to you, I'm thinking two things. One, you almost seem to be competing with the credit unions because you have not embraced them as part of your group here. And at the same time, the credit union, which is different because it's owned by the shareholders, it's owned, they get their dividends and what have you, and they have a simplified way, but they would not be having access to some of the things that the banks would have access to. But it's a body there. So one, I'm wondering why would the bank or the central bank embrace a system which is in a way competing directly with that subgroup of financial institutions? That's one. The second point is that if you, in my view, well, with my experience in banking and finance and international generally, I'm wondering if other countries would have a similar thing in terms of the fewer documentation and fewer processes that you need to get a bank account. Because I'm reminded of 2008 when we had the global financial crisis. And one of the things that we learned from that is that you had some good mortgages or financial assets or instruments which were sort of bundled up with some subprime ones. And it was sold all around the place. But once the first problem occurred, then you had a spiraling effect. It came into a global financial crisis and an economic crisis. So there could be the danger, and I'm just throwing that out because you can say what you can do to prevent that, of bundling up financial institutions which may be good and trying to uphold a certain standard and a certain prudential way of operating, and bundle it up with some other areas which can eventually pull them down. I leave it there. Thank you.
Thank you very much for your question. We'll take another one. Any other questions? All right, we'll give the panel the opportunity to respond. Governor, or do you want to take this?
I'm going to start, but I'm sure my banking colleagues will want to respond as well. Thanks for the question and the interest. The fact of the matter is that banks constitute about 85% of the financial system. So credit unions are very important. Credit unions are becoming increasingly important. Several of us here, myself included, are members of credit unions. I believe in the movement, okay? But when you look at the financial system, banks dominate the financial system, 85% of the assets. So if we're going to solve this problem, we have to start with banks. And as a central bank, we do not supervise credit unions. We supervise banks. So that's where we have to start. Competition will always happen between the banks and the credit unions, but to be honest with you, I don't see this as competing with the credit unions. I see it as empowering our people, small business, startups, people just out of school who want to access the financial system. I see it as giving them a chance. The reality is that many people have both bank and credit union accounts. That's how they do their business in the region. So I don't see it as an either-or situation. But I also want to make the point that we have been very deliberate at the central bank, very deliberate, over the last several years, during my tenure, I can speak for that with absolutely no fear of contradiction, of including credit unions. So whether you look at the ACH, the Automated Clearinghouse, the president of the Bankers Association spoke to that earlier, where you can do the checks and you can do the exchange, the ETF, electronic funds transfer, EFTs. Credit unions are now included. When you look at, yes, it's open to them. When you look at the partial credit guarantee program, which we launched in 2020 in the middle of the pandemic, credit unions have access to that. St. Kitts Credit Union, Corporate Credit Union, has already accessed that program. The credit bureau that we have now launched, starting in Antigua and Barbuda and coming throughout the currency union, it is open to credit union, and several credit unions have begun the process of being onboarded on the credit bureau. So our vision for the financial system in the currency union is inclusion of credit unions, all of them. And that is why back in 2019, I believe it was, we signed ECCB, a membership of CU, the Caribbean Confederation of Credit Unions, to partner, to work together on things like credit bureau or partial credit guarantee, digital currency payments, and so on and so on. So I just want to assure you that what we're doing here with First Step is to strengthen the hand of the citizen and the resident, whether you choose to do a bank or credit union. So we don't see it as competing in that sense. We see it as giving you options, giving you more choices, making it easier for you to access the banking system. And you know, credit unions also have banks, because they have to have a bank, yes? So at the end of the day, you can't get around banks. Banks have a role to play in our system, and credit unions, of course, are playing a very important role. So I just want to say that we are increasingly getting the credit unions involved in all that we're doing, The automated clearinghouse I mentioned, we actually have 4 credit unions that will start that pilot. The applications are before us, and we are working through them. We've changed the rules to give them access. All the governments have agreed to that, and we are working with the credit unions. So there is a definite effort to get our credit unions involved. And I think it's a working together. And I think the working group will tell you shortly that we did work with national regulators in this working group. So credit unions have been involved, and perhaps I should stop and let them explain that.
Just to address the question of concern about banks lowering or taking on increased risks and mixing it with the high standards that banks have been deemed to operate with as far as account opening and due diligence is concerned. As would have been explained to you by the panel, this product was really well thought of to enable us to transfer risk from how we viewed risk at the customer level. When banks opened accounts before, every single customer who walked into the door was assessed to determine the requirements that they should meet based on their risk profile. But this product, to make it appeal to people who do not yet have a bank account, we set parameters in there that would limit their risk exposure, in that a person can only put a certain amount of money per year through their account, and there are other areas in there that protects the risk in the product and doesn't allow the system to become exposed to bad actors, because they would have very limited ability to use this product for those purposes. So this is not about lowering the high standards that banks have. It's recognizing that a person who is entering and who wants to enter the financial system legitimately, who is coming out of school, who is just starting a business, who is at home just starting a job, living with their parents at home, and who doesn't have all the standard documentation that banks would have asked for, we have created an avenue where they can have access to the financial system. They can have an account, they can receive their salary through that account, they certainly can have a debit card that they can use for financial transactions and begin to be a part of understanding how the system works and how it can benefit them.
Thank you very much. You wanted to add?
Yeah, let me just add, I think Governor and the President of the ECCB Bankers Association has done very well, but I will add this. I want to emphasize that the banks did quite a bit of work to ensure that we were still meeting the requirements that is within legislation, and we were not in any way sacrificing our relationship with these international bodies in terms of their expectations. So I would want to, if there is anyone else who shares that opinion, give them further confidence that we have not compromised our standard in any way. What we've done is really just to ensure that we are meeting the standard in a way that also facilitates this inclusion and allows persons to open these accounts in our ECCB currency union.
We've taken care. They said how long they worked for. Because whatever we do, we have to be able to defend by law and in any international forum. Because as Ron said, we have to make sure we still have correspondent banking relationships. So we've been very thoughtful, very careful that in the design, and some people say, why just open the thing, just make it easy, no, we can't do that. Because then you won't be able to send money to your child at university in the United States, for example. And if you have a business, you won't be able to buy goods because you won't get a wire transfer, no correspondent bank. So we can't just let it loose. But care has been taken by that group, that working group, very conscientiously to make sure whatever we do, we can defend in law, but that we get a practice that makes it accessible to all.
I think I just wanted to address one part of your question, and I don't think that has been addressed. You had asked whether there were other types of accounts like this in other jurisdictions. That was a part of the question, and the answer to that is yes. So in other jurisdictions where it is apparent that there are underbanked or unserved sectors, these types of accounts are actually very much encouraged to ensure that we don't have disenfranchised persons in our economies and within our systems. So, for example, we may have a group such as a women's group with a small business trying to transact and trying to manage their deposits and trying to pay their bills appropriately. And these types of accounts actually helps from a developmental perspective for groups who are disenfranchised or who are not served by the traditional banking system. More importantly, this account called First Step, that's a deliberate name, and it's very much in keeping with what this does for an individual, because you're given access, a first step into the financial system, the legitimate financial system. And from that first step, it enables you to plan and to achieve further goals. So from that, you can establish some level of credit worthiness with your institution. That means you can then access credit. You can then look at other products, such as insurance type products. You can then look at things like beginning investment and saving types products. So it's developmental in nature. And then the final thing I'd like to say is around the point about risk and introducing additional risk into the bank by allowing these types of accounts. I think all panelists have kind of articulated around that the product itself is low risk. And because the handcuffs, so to speak, around the usage of the product are so stringent, the risk to the institution itself is extremely low. So I hope that this, as well as the other contributions, adequately allays any fears that you may have around this type of account.
All right, thank you very much for that explanation. And we do have some questions online, so I'll take those questions before. So just for viewers and or listeners, you can participate as well, even though you're not physically in the room. You can send us your questions via WhatsApp, and the WhatsApp number, I have it right here. So for those persons, if you could just bring that up as well on the screen for the WhatsApp number. The number is 869-662-2561. That's 869-662-2561. So you can participate by sending your questions to that WhatsApp number, and we'll try and get them read in the session so we can get some answers to that. Now we have a question here on WhatsApp. It says, what if an account holder exceed the $36,000 a year? Can the bank contact that customer to close that account?
Okay, I think I've established myself as one of the policy setters, so I'll take that question. Again, speaking to the work that this committee has done along with the ECCB, this is actually a question that has come up before. So what happens if I exceed the amount? Does that mean that the bank closes this account that we've now said we've done so much work to allow you to have? And the simple answer to that is no. That is not the immediate action, and that is not the intention of the bank. What a bank is supposed to do, and what our LFIs are doing, licensed financial institutions, is ensuring that we have our customers acting in a way on their accounts, transacting in a way that we understand. It's as simple as that. Transacting in a way that we understand. A customer the expectation may be for $3,000 a month. However, for whatever reason, you got an extra $500. That may not be something that we understand immediately, but we can call you, and we would likely call you and say, hey, we noticed this. We just wanted to understand. And if it is a situation where we realize that this customer may be earning more income, we now start to think of other products that we could offer you. So this again speaks to the name of this account, First Step. It is not an account that we intend to use to get you in the door, and if you do anything wrong, we get you out the door. That is really not the work, and we don't want that to be the message here today. It is the first step to your financial journey. If you don't have an account now, if you had difficulty having one before or getting one before, you now have an opportunity. And if your finances grow, if you mature in what you are able to bring to that account, we give you other options. That is truly the intent.
Right. Okay. All right, we have a question now on Facebook. So Facebook is also an option for you where you can, that's the ECCB Connects Facebook page. You can send us your questions there as well. We have a listener here saying, have we examined ways to make the CDD process easier for financial institutions, whether simple or enhanced? Have we looked at integrating government systems with banking systems, digitizing government ID systems that can easily be verified by banks automatically? Additionally, a digitized ID system can have multiple functions as ID, address, and even income proof. So institutions only ask for your unique digitized ID rather than multiple paper-based documents and IDs. And they were using a system in India as a good reference. So that's a suggestion from our viewer and listener.
The questioner, the intervention is absolutely right. The person, you are absolutely right. That is where we have to go as a region. So she spoke about a unique digital ID. A lot of the trouble we have now with getting the financial system working more pain-free, less pain points, less frictions, is because we do not have a unique digital identifier. We found that with the credit bureau. We've seen that with the government accounts and payments. And I think St. Kitts and Nevis, for example, is pursuing that digital ID system. When you look at what Estonia has done, for example, and other parts of the world where, I mean, the thing really works like clockwork. This is where we have to go if we're going to build out the digital economy and really make it easier for people to do business, not just with banks, but with governments and with each other. So that is, I hope to say medium, not so long term, but the short term is the first step. While we're getting these integration, these digital transformations on the way, we have to start now, and that we've done what we could. But that is where we need to go, that unique digital ID. And I want you to encourage whoever wrote that, asked that question and put that in, to encourage your governments and your authorities, wherever you are, to move faster in that direction. It will help our region.
And I also would like to say that those types of products are what would feed into the longer-term milestone on the roadmap of the ease of account opening within the currency union. So addressing how that plays into how we apply simplified due diligence and how we are able to do our KYC requirements, that will all fall or form a part of the third milestone.
And just to add as well, one of the discussions that we're having with the credit bureau, which is in the process of being rolled out, and once that rollout process is complete, the credit bureau also has the capacity, before we get to the point of single point digital ID across the ECCU, the credit bureau has the capacity to provide a single source identification of customers on behalf of banks, where you pretty much go to the credit bureau, they access the systems of governments around the region, and they provide banks with a source of identification. So it is something that potentially could come before we get to the full-scale digital ID for banks. But a lot of work is being done in the background to prepare this region to move forward in a much more progressive manner in that space.
Right. So, Andre, I would like to come in here.
Yes.
And, can you hear me?
Yes.
So I'd like to come in here because I think the listener would have questioned also in terms of customer due diligence and enhanced due diligence. And so I think it's necessary for the regulator to indicate. And I also want to lean in from the question that was presented at the audience. So when it comes to customer due diligence and enhanced due diligence, we are governed by one piece of legislation within our country, and that is the Anti-Money Laundering, Combating of Financing of Terrorism legislation, so AML-CFT for our listeners. And I wanted to indicate here, there is no distinction between our licensed financial institutions, that being the commercial banks or credit unions. They're governed by the same piece of legislation. Where we have witnessed the distinction is in the operationalization of the legislation, and that means the application within our financial institutions. And so to the person who would have posted the question online, yes, indeed, we have given consideration to what customer due diligence is supposed to look like, enhanced due diligence, but more so, what simplified due diligence is supposed to look like. And so as part of that, and Mr. Phillips would have indicated when he was giving his opening remarks, we have a fragmented system. You move from one financial institution to the next, and they're each going to ask you for different requirements as it relates to what is due diligence. We also have to take into consideration our risk framework. So many of us could attest, I have been to a bank, I've walked in, nobody has assessed my risk, they don't know where I work, but I've been told you need 2 pieces of ID, proof of address, job letter. And by the way, you who do not have an account, I need a bank reference letter from you. So how am I going to open that account? And so what we have done as part of the working group is in partnering with our financial institution is to lay the framework within legislation and also in compliance with international best practices, international standards. And I do not want to bore the audience to death, but all of our countries are members of what we call the Caribbean Financial Action Task Force. And there are specific recommendations that we have agreed to abide by. And so as part of that framework, what we have done is develop specific standards. And so for our licensed financial institutions, we have now issued what we call simplified due diligence standards. What does this mean to you? It means if you're entering Bank of St. Lucia, for instance, or you've moved on to Republic Bank, it is the same requirements. So one is not asking you for 2, one is not asking you for 1 piece of ID. The same, consistency across the board. The next phase then is the assessment of risk. And this is what we are working with our financial institutions. How can we standardize the process that you're going by in risk assessing customers and understanding the risk that they present to your financial institution? And this is where we are. And the work is ongoing in that regard. And so the financial institutions, we've recently conducted a training with all of our financial institutions on the conduct of risk assessments within their entities as well. So I thought it was important to bring that to the person who would have posed the questions, that it is not one. So the ECCU first step is just that, the first step. And so we are moving on along that journey with other things by laying the foundation to ensure that we are in keeping with international best practices, but it is accessible, it is affordable, it is reachable for the persons within our community. Thanks.
All right, thank you very much for that. There is a comment on YouTube that's similar to the question on Facebook. The many forms that sometimes have to be completed is what makes the process a bit difficult. The process should be streamlined or a bit easier, perhaps digital or electronic for ease of completion. So just a comment to supplement what was said earlier.
Agreed.
Okay. Well, Nola will say simply agreed, but I will add something to that, to the comment online. And it's very true. And I know our licensed financial institutions have come together and said we have to do better in that regard. The governor has all but mandated that we have to do better in that regard. So it's something that we are definitely looking at. EKYC, as we call it, or using technology in the digital space to allow persons to open their accounts. While it is something that has been in the international space for quite some time, I think it's coming on stream in our region quite strongly. We have banks, licensed financial institutions who are offering it now, including the one that I am with. I know that we are doing a lot in this space to allow customers to have easier access to these financial services. So we are making use of the technology. Sometimes we tend to say that our region, and I'm part of a group that is big on looking at developments in technology and in the financial space, and I know they may be watching right now. We tend to say that in our region we move way too slow. There are a lot of things that banks have to consider in terms of implementing those types of technologies. And again, to Levi's point, without boring the audience to death, I could just tell the public that we are addressing it. Okay. We are addressing it.
All right. So, and that's for our viewers also on YouTube. We can send your comments on YouTube, and we will try to get to some of them as well. We won't get to all, but we'll try and get to as many as we can. All right, before we get back to social media and the room, I'm going to now give Mrs. Levia Burton Mark, who spoke earlier. She's Deputy Director at the ECCB, and you're also part of the working group. You're going to be speaking, and I think you've made some reference to a bit of it already about the regulatory aspect of this process and what it involves. What actions are the ECCB currently taking to address the issue or to be more inclusive as it relates to the regulatory aspect of this process?
Great. So I think it's important to give some background as well. Yes. So the ECCB has, and the Governor would have spoken to our initiative as it relates to financial inclusion. And the aspect of financial exclusion is not one that we alone face within our region. Now, all of the panelists have spoke to ensuring that we are adhering to international best practices. We want to protect our correspondent banks. And so the work that we are doing here by no means reduces the requirements in entering our financial system. As a matter of fact, it is actually enhancing and strengthening the system that we have in place. Because if we are talking about risk and assessing risk, one cannot assess risk if you cannot identify or see the risk. So if people are not within the system, we are unaware as to the risk that we are exposed to. And so financial inclusion is seeking to achieve that. Part of the international standards, what they would have recognized, and they would have recently issued guidance, and that is the Financial Action Task Force, is a document and guidance on financial inclusion. Why? Because they recognize that there were unintended consequences as it relates to the application of the international standards. They were simply too stringent. And so as part of that, when we're speaking about low-risk situations where we have assessed our risk, which, as a matter of fact, all of our member countries have done. They've conducted national risk assessments. They are fully aware of the areas that present high risk to them as a country. And so with that information, what the standards are telling us, where we have identified low-risk sectors, and in the conduct of your risk assessment as a financial institution, you can apply simplified measures. And this is not only for commercial banks. This is also for the credit union sector. So simplified due diligence, when we started this work, the foundation of this was reviewing our legislation, one, to find out, are there provisions in legislation for us to ensure we can apply simplified due diligence? But most importantly, for some of our countries who would have undergone what they call a mutual evaluation, what was the assessment that was assigned to them? And most of them were largely compliant with the recommendation, which means the foundation that we had laid across, the legislation that had been implemented was adequate. The issue was application. And so taking this on board, we would have developed the standards, but we would have also taken into consideration the product, and hence came in the ECCU first step account. The product in itself, based on the information that we had, based on the risk assessment that would have gone into issuance of that product, and the information that was taken on board, this is how we came about. So you recognize the product has a certain threshold. The product has certain restrictions on it. We've also looked at a certain type of product, and that is a savings account. And so when you look at the risk and the vulnerability associated with that product, it was deemed that this product would be able to mitigate any risk that would be presented to our system. Now, we're not saying we have eradicated all risk in the system, But part of that, and Ron would have also alluded to it, is the ongoing monitoring that will take place at our financial institution. And as a regulator, we have been working closely with our institutions, some on a one-on-one basis, in terms of the systems that they are implementing to ensure that they have robust systems to accommodate for this.
So basically measuring the risk versus reward, in a sense.
Indeed.
Right. Okay, well, we are upon the next result of the poll, so I think we should go to that, because actually we have kind of elapsed the time for that. So if we could just go to the poll number 3, so we could see the results of that. And the question was, what is your biggest concern with the banking sector? Fees and charges. This is probably the highest we've had in terms of results so far. Fees and charges. The majority of the persons who took the poll are reporting that that is their biggest concern with the banking sector. Second to that is request for documentation, which I think we've addressed adequately here, and the need for maybe adopting more digital forms. Customer service is also there, but the third one is access to credit. And I know this is something that you've spoken at length about in previous occasions, Governor, about access to credit, especially for the entrepreneur, business community. So that is something, again, that persons express concerns. Fees and charges, though, and I want to move on to that, but I really need to discuss, maybe just bring that up, because obviously banks have to make money, and they have ways in which they do that, but I believe, and based on this result, that persons believe that banks are probably overdoing it when it comes to that. Is there any plan to look at that particular area as we look at simplifying the process of opening a bank account?
Well, banks continually look at fees and charges, and now if you go on to the central bank's website, you will see all of the fees and charges that are applied by commercial banks. If you go on to the websites of commercial banks, you can see what fees they charge for specific services. You can do your comparison and decide who you want to do business with. I should also add that for most types of accounts, savings, checking, card types accounts, customers with financial literacy can understand that you can pretty much do business with your bank almost for free. I think what banks would charge for, banks have now, or traditional commercial banks now have a bit of a disadvantage in that they're players who are operating on the fringes of the system and providing financial services very efficiently without the trappings of a whole big branch network, and certainly without having to provide a service to provide cash to customers in the banking hall or to take deposits in the banking hall. And for the traditional banks that do, those services have become really expensive. In several parts of the world, societies have moved away from cash, so you never have to go into a bank and see people, queuing up, going into cash checks. The whole system runs electronically at significantly lower cost than traditional banks have to bear to store cash, to clean it, to provide all of these services to banks. So banks seek to recover some of the cost of doing that business, but we allow a lot of access to customers who go to the ATMs and do transactions, who perform electronic funds transfer. Electronic funds transfer, which you can use to pay pretty much anybody across the currency union. Most banks, the rates are quite low, less than $10. Several banks, like Bank of St. Lucia, First Caribbean, a few other banks, electronic funds transfers are free. You can send payments for free. You can access your account for free. You can have a credit card. You can access payment services via your credit card. You have 30 days to pay off that credit. You pay no interest. So it's about understanding exactly what your financial services are and how you navigate the things that banks charge for, because they're very expensive for the banks to provide, and likewise your understanding of how much you can access financial services for free.
Okay. All right. On that note, we will go to the fourth poll question, actually our final poll question for the evening. And this one should be quite interesting. What would you encourage, or what would encourage you the most to open or maintain a bank account? The options are simplified application process, better customer service, more transparent fees, improved access through mobile or online platforms, or greater trust in the financial institutions. And we already started to get responses to that. So we'll give you the results for that a little later on. All right, so we're going to try and do a hybrid process here. We'll try to get some more questions from the room, from persons in the room. We'll also go online because we have a few questions coming in online as well on WhatsApp, Facebook, and YouTube. But we want to give our participants here in the room also a chance to ask your questions. So the microphone is right there, so you can ask your questions and to the panel will address it.
Good afternoon, everyone. Excellent discussion. Thank you so very much for taking the time. But I have a serious concern, and it's the first question that was posed this evening, the one by Willa that I caught while I was on my way here. And it speaks to my mind, the role of the credit union in all of this. While I understand that it's a banker's event, and I further understand that the role of the central bank is to provide supervision from the banks, I have a difficulty. If I am understanding that as per the governor's statement, that 85% of the economic space is controlled by the bank. And we are speaking about de-risking or mitigating our risks. Do you or do you not believe that 15% may be cause for risk? Because while I listened, I heard that the measure is in part to protect the correspondent banks. I also heard that but I understand that from what's said earlier, that the measure is protecting the correspondent bank. For me, there is a difficulty in the whole of this, and while I welcome it because I looked forward to it, I understand that the whole of this is just further seeking, again, as per my first statement, that this is a banker's thing. It further seeks to drive the customers of the credit union towards the bank. Because if you are making the steps of a bank account easier for persons, opening an account easier at the banks, and not giving the credit unions the same opportunity, what it seeks to do is to drive person to the bank. I can't take this thing with the 2 and 3 thing, and so I going down by the bank. Whereas traditionally, the banks are the same persons that have been with their strict diligence, with the strict due diligence, have been tracing the customers to the credit union. So then, a farmer up in the hill, a fisherman, whose only course was to bank at the credit union, now realize all he has to do is to take his one piece of documentation, I'm assuming because I wasn't here to hear it, his one piece of documentation down to the bank. The bank that traditionally did not want his business. One piece of documentation down to the bank. And then they embrace him. It's the whole bank that continues the whole attempted migration of customers away from the credit unions. Because when a customer from the credit union needs to get a loan, and they have to call around at each of the banks to get a credit rating or whatever it is, then a credit check, thank you. Then that bank turn around and pirates the customer. So I'm saying that if the credit union is an equal or a third partner in this whole marriage, then I think that it ought to have the necessary consideration being given onto it. There's one other point I wanted to make. It might have slipped me, but I'm going to find it. The credit bureau. It's interesting to me that this particular initiative leaves the credit union behind. But the credit bureau initiative seeks to ensure that the credit union onboards at the same time that the banks are onboarding. I see it as an unequal marriage of convenience. I need you today, I don't need you tomorrow. I need you when it is important so the banks can get the credit information to drive their businesses. But I don't need you when your members can easily open an account. My question therefore is, how soon would an attempt be made at balancing the equation so that members of the central bank, of the credit unions themselves, can have the option of the ease of opening an account?
Thank you very much.
As soon as they're ready. As soon as they're ready. This is not about banks versus credit unions. I want to repeat, it is not. Banks, credit unions need banks. I think we all know that. If anybody doesn't know that, your credit union has a bank, okay? Every credit union has at least one bank. Some have more than one. They have to work together. At ECCB, we have long recognized the need for partnership between banks and credit unions. We have periodic meetings with the regulators of credit unions and the central bank and the securities regulator. And we discuss how we could collaborate. So customers will decide where they want to bank, whether it is with their credit union or their bank. We are giving you that choice. Now, the banking system and the financial system has changed. You think about 10 years ago, the Canadian banks dominated the space. Now, it's our indigenous banks that control more than 70% of the banking assets in banking. And what we find is that where indigenous banks were competing with the Canadian banks, now it's credit unions competing with indigenous banks. The thing has evolved and will continue to evolve. I have had the opportunity, at the invitation of the credit unions, to address them several times over the last several years. And I have asked the credit unions, who want all access to all that the banks have, but they don't want the central bank to regulate them. Fine, no problem. But let me ask you, are you facing the same credit risk as banks? And the answer is yes, Governor, we're facing the same credit risk. It's the same society, the same people, same economy, we're facing the same credit risk. That is why the credit bureau is available to banks and credit unions at the same time. Because we recognize if we only think about the banks and we don't think about the credit unions, then what is going to happen is that over time, NPLs will grow not just in the banking system, but in the credit unions, and it will create an issue for our economy. And we have seen non-performing loans rising in the credit union movement, and they're already high in the banking system. So the credit bureau is intended to do two things. One, to help all financial institutions, credit unions, banks, and others, to manage credit risk. And secondly, very importantly for us, to make more credit available to our people, because what we've discovered around the world, wherever credit bureau has been established, credit has increased. That's the credit bureau. Now, when it comes to the question of deposit insurance, which we are now working on, and in fact, deposit insurance bill was passed recently in Grenada, and I believe maybe Antigua and Barbuda, and it's coming through the islands. We have said that that is something we want to make available to the credit unions as well, because we recognize the growing membership also needs that protection. And when I speak to credit unions, they say, yes, we would like to be part of that. Of course, there has to be some terms and some rules for engagement. So what I'm saying is that rather than see it as a two system, we see it as one system with multiple players. At the end of the day, the central bank does not regulate credit unions. So we can offer advice, we can offer support, we can offer services, but it is up to the credit unions. And my challenge to the credit unions would be to say, just as the banks and the central bank have organized this town hall tonight, you organize your own town hall. Come and sit down, face your membership, tell them what you're doing in their name, tell them how you're serving them. Let them sit down with the regulator. You see what we have here? Side by side. The banks in the middle and the two security officers from the central bank on either side. You realize? The buyer there and I'm right here. And of course, Andrew keeping all of us in check. That's partnership. So what you want is the same thing, to have the credit union sit down with the regulator. And if they wish to have the central bank at that thing, we will come. Because we have a number of conferences now where we invite our credit unions to join us and to participate as panelists. So I want to just encourage us to collaborate. There's a lot of suspicion about the role of the central bank and credit unions and so on. And I think at this stage we have shown that we are willing to work with our credit unions. And I've given several examples. Credit bureau, partial credit guarantee. I've been pushing for credit unions to make better use of the partial credit guarantee. There's no agenda there. You have to lower your risk to give access of credit to your members. And the partial credit guarantee helps you manage that risk. It's up to you. Some development banks have begun to take it up. A couple of credit unions have. More are expected to come online. So what we've tried to do very systematically is to offer as many services as possible. Because like I said, several of us, myself included, are members of credit unions. We understand the value of the credit union movement. I've always said it's a powerful force for good in our region. And it needs to be supported. The movement needs the support of all of us, including the central bank. So I want to flip the challenge back to you. Bring a town hall, tell us what you're doing, and let's see how we could partner even more. The central bank stands ready to work with all of our credit unions.
I would just like to add that the overarching theme which brought about these changes that came out of the working committee was to foster greater financial inclusion. And when I described how the working committee came about, one of the first things I said was that the Bankers Association came forward based on all of the express pain points from their customers, and they were trying to find a solution. So it tells me that these individuals want to access a bank account. It doesn't feel like we're poaching, so to speak, from another segment of the financial services industry. We're talking about addressing the challenges of individuals who are saying, I would like to have a bank account, but these are the things that are hampering me or preventing me from doing so. And I think even the polls are showing and supporting that, that idea as well.
And if I may, Andre, just
yes.
I'd like to come in with the framework and the legislation. I think I made the point a few times. When it comes to due diligence, we are governed by one piece of legislation. As a matter of fact, when we formed the working group, and Mrs. Gabriel would have indicated, there were other regulators who sat at the table with us. More so, when we sat there trying to pull our framework together, ECCB being the new kids to the block in terms of AML CFT, it was indeed a regulator who handed us their standards and said, here, you can use this as guidance in developing your framework. It was indeed regulators when we were developing our framework that we circulated those standards to for their comments. And so Governor spoke about the collaboration. We have had this throughout the process. We presented our roadmap. We presented the due diligence guidance. The legislation, when we speak about the provisions that is accessible to all in terms of simplified due diligence, it is accessible to the credit unions as well. So if the challenge that is being posed perhaps is that there is need for further guidance within the sector, we have taken the feedback on board. And so, as Governor has indicated, we will go back to the table, Governor, and where possible, we will let the regulators know this is the feedback we received from the town hall. But it means that there is need for further engagement from the credit union sector. And so your challenges can be voiced, as Nolan would have indicated here. Beyond this, I think it's important to note, there is no competition. I don't think we have a side on all. When we speak of financial inclusion, everybody to the table. Governor said, whosoever may come, come. We want you in the formal financial sector. And so where there are areas for synergies and partnerships, I don't think the central bank has ever shied away from this. But it's important to note that this has been a collaborative effort, not just with our commercial banks, but with the other national regulators. And when we speak about a legislative framework, it is not for the commercial banks only. It is for all financial institutions operated within the space.
Thank you very much. We go back to online, and we're going to come shortly to the final poll results. This question was asked earlier on WhatsApp. What is the interest rate on this account, and is this account in both US and Eastern Caribbean dollars?
So thank you for that question online. The banks, and again in a collaborative effect, the banks have agreed with the central bank that we will offer or provide an interest factor of 2% on these accounts.
Put your hands together for the banks, please. Now, remember, there's no charge on this account. We insisted, and they agreed. We insisted, the central bank insisted that they must pay interest, and they agreed. There is a cost to operate a bank account, to administrate for the banks, but given what we're trying to do to include, there is going to be. And the 2% is the minimum savings rate. So that's how that we got to 2%. So anywhere in the currency union where a savings account exists, you are required by law, Monetary Council directive, that you pay 2%. You'll be paid 2%. So that's what you're getting. So first step is really inclusive. So whether you have $1,000 or $100 or $10, 2%. And that is really to encourage people to save and then to be able to expand, as was said earlier, to other services that are available. And
if I could just add, again, building from the comments, I mean, not really to go back to this, but building from the comments on whether the banks are trying to compete with the credit union movement, I think if we look at this situation, we can clearly see that this is not about competition. Banks have chosen to pay this interest rate and waive fees, maintenance fees, withdrawal deposit fees on these accounts, simply to ensure that we have this financial inclusion, to allow persons to come into. This is truly a revolutionary time. I cannot recall a time where the banks have thrown competition completely out of the door and said, we're doing this together, we're offering the same thing to everybody. So this is really not about competition in any way. In any way.
I just want to add, I mean, customer service. I mean, for me, for us at the central bank, that's one of the things we hear consistently as we move around the currency union. We want better service from our banks. And part of the ease of opening a bank account is part of better service. It's a basic first step. I mean, so banks have to be listening. At the central bank, we say feedback is a gift. And my wife has taught me over many years, listening is wanting to hear. Wanting to hear. So we've heard and we've responded. And I really feel that this ought not to be characterized as competition with credit unions. It's about banks listening finally to customers. You heard it from Nolan and Ron earlier, recognizing that the banks at times have made it perhaps more difficult than it needed to be. There were reasons why, but on reflection and on an investigation and on research and on collaboration, we found a path to make it easier. And if you see what's going on in our world today, you and I must know we have to do for ourselves what we can do for ourselves. We have to handle our own business. And part of handling our own business is making it easier for people to be able to access the financial services and to be able to operate. And that is what we're trying to do here. And, I mean, the more the merrier. The credit unions want to come and do other things with us. We are more than willing. I think they know that. We're very, very open. We'll continue to be very open on these things. But for us, it is about making sure that the system serves the people of the region. You go back to what I said at the beginning. Our mission is to advance the good of the people of the currency union, where they not only strive, but thrive and realize their God-given potential. I think Nolan wanted to come in.
I was going to ask if there was a second part to the question that Ron answered about the currency. Was it the interest rates?
US or EC? Well, it's also, it is both currencies.
It's an XCD account, an EC account.
XCD account, okay. Another question on WhatsApp. Yes. Yes, well, US account eventually. Yes. And this is going back to fees. Banks charge varying fees to receive incoming transfers from Caribbean countries. The fees I pay range from $0 to $65. There are also fees associated with online and mobile transfers to local banks, for example, from Bank of Nevis to National Bank. And is the ECCB exploring opportunities to regulate fees associated with online transfers and incoming transfers?
The banks are smiling because they're not totally excited about this one, but they know it's coming. Oh, yes, it's coming. So yes, we are in fact in the process of setting up an Office of Financial Conduct and Inclusion. And what that simply means is that right now under the Banking Act, the central bank does not have the powers to approve fees or not approve fees. All the Banking Act gives the central bank the power to do is to say, ask the question, have you given adequate notice to the customer? And in the law, adequate notice is 30 days. We have heard a lot of complaints about high fees and charges. And what we have said is that there has to be a way to adjudicate some of these complaints in a fair manner, both to the customer and the financial institution. And so this Office of Financial Conduct is going to be established. We are now having amendments to the Banking Act. Already St. Vincent, Grenadines, and Antigua and Barbuda have passed the amendments to enable this legislation, this new provisions for the central bank. And that will allow the central bank to basically be able to approve fees, reject fees, investigate complaints from customers about certain transactions with the banks. And to be fair, because remember what I said about financial inclusion at the beginning, it is access to financial services such as banking, payments, credit, and insurance that are affordable, fair, and transparent. And that is what we will be doing. So I always have to be careful and say, banks have different business models. The president earlier spoke to the fact that on our website, the ECCB's website, you can find side by side the fees of the various financial institutions in each country. So you can compare and contrast, and customers can decide where they want to take their business. You can do that. You have the power to do that right now. But whether or not a fee should be $10 versus $5 versus, goes to cost of service, business model, and a range of issues. And if you attempting to assess fairness and transparency, you have to make assessments of those considerations. For example, cost, business model, and so on, to be able to determine. So we are in the process of being empowered by law, the central bank, to look at fees and charges in our region. And that is what we call financial consumer protection. I don't know, Levi, if you want to say anything on that. I don't know if the banks want to say anything on that. They don't look exactly thrilled, but it's coming. And again, we'll do it in a partnership. We'll be reasonable, we'll be fair, but we'll also stand up for the public. And that's our role under the law.
All right, thank you very much, Governor. All right, so we're going to go to the poll results for question number 4. And the question was, what would encourage you the most to open or maintain a bank account? A majority of the persons polled said improved access through mobile or online platforms. So we spoke about that a lot tonight, using the digital technology to streamline the services offered at the banks. So improve access through mobile and online platforms. Second to that is greater trust in the financial institutions and more transparent fees. And we talked about fees just moments ago. So trust in financial institutions is also very important. All right. We do have a lot more questions online, but I'm going to again come back to the room to give persons here an opportunity to ask questions. So if we do have any questions or comments, the microphone is available. You can approach the microphone and pose your question. Any questions in the room? Don't tell me we're going to get more questions online than in the room. You have the advantage. Use it. All right, while we wait, I'm going to go back to a WhatsApp question. This was asked earlier. Are there any banks in St. Kitts currently already offering this type of account?
Yes. So CIBC is offering the product, yes.
Okay. All right. Another question on WhatsApp. Could a customer have a basic bank account in more than one bank? I think we might probably address that earlier.
Yeah.
Yes, it's only one account. Yes.
One account.
Yes. Are these accounts only for, well, you've answered that, is only EC dollars. Are there international fees assessed? Are there international fees assessed when used internationally? What is the interest rate? I think they're probably asking if there are fees associated with online transactions, maybe, I guess, or international transactions.
I guess if you use your debit card.
Yeah.
But if you use your debit card, there are no fees attached to it except where, because the merchant will pay fees for a transaction that you process at the overseas merchant. But if you use your debit card, it doesn't attract a local fee to your account. No.
Okay. All right, so we have a question here on Facebook. Very good initiative. They're commending the regional banks and the ECCB on this initiative. This will encourage young people to start saving early. What are the other plans to encourage young people to take the first step and start saving and investing earlier in life?
I'll take that one. I think as this account rolls out and we have a critical mass of financial institutions offering the product, the banks themselves and the associations have been committed to work with the central bank to do public awareness like we're doing here today. This type of forum will continue in jurisdictions around the region driven by the associations, as well as the local associations, as well as the ECCU Bankers Association, to help the public to understand the services that are available and how they can access the financial system. And then in the broader context, the banks have in fact taken on board the challenge by the central bank to improve financial literacy across the currency union, and we are fully committed to that in our public education around how you can save and earn and how we can create intergenerational wealth, which is not something that's discussed a whole lot in our countries, but we really have to start to focus on how we can help ourselves a whole lot more and provide assets that we can have to help the next generation who are coming up in the bank. So the banks are very much committed to that process and are themselves moving on to not just continuing to create lending, credit type products and traditional savings, or helping people to get loans to buy land and property, but also creating simple investment products with very low threshold. People can start investing in mutual funds as low as $100, $200 dollars entry point. You can start investing in a mutual fund that's available from several providers across the region, increasing number of providers, and you can start on the path of having alternatives to building wealth throughout the currency union.
When you think about money and you think about finances and bank accounts, savings, you know, these are fundamental things to life. This is how you fund your life. This is how you achieve your goals. And I think one of the things I would love to see is for our educational system to incorporate some level of money management much earlier than we currently do. Because I think when I listen to what young people now are saying, compared to my generation and the generation before me, they have a lot higher tolerance for a lot of assets and instruments that are out there in the financial sphere. And I think the onus is on us, not just around financial management, but also around options that are available in the marketplace. We need to be educating our young people on much, much earlier than we are.
All right, thank you very much.
One of the things I'm really hoping that AI might assist us with is precisely that scaling up. Because the truth is that we have been doing financial literacy certainly at the central bank for more than 20 years, since 2002, so this is 23 years. But we've touched hundreds of people, maybe thousands, but we need to touch hundreds of thousands. We need to get to scale. And part of how we're going to get to scale is the use of technology. So I don't want to, AI has its positives and its negatives, both, but I also feel it potentially could be a tool to help us really expedite the work of financial literacy. Because that survey that we did in 2023 showed that many of our people are financially illiterate, not literate, even with degrees. Even with degrees. So going to a university does not make you financially literate. There are people who have advanced degrees and they cannot manage money. And we have to change that. Because the truth is, if you can't manage money, no amount of salary increase will fix that problem for you. All right, I don't want to get into financial literacy tonight. That's just a different night. But I want to agree with my colleagues. This is so super important for what we want to do to make our people thrive. Rob spoke, the president of the Bankers Association, spoke about the mutual funds. There are two. There's one that is being launched this week, right? This week in St. Kitts and Nevis. They're moving through the islands. Bank of St. Lucia has one, UTC has one, which allows our people to access the international markets. And why this is important is because only 4% of our people, 1 in 25, are actually investing in the regional market. And of course, part of the reason is that it is a small market and in limited options. But when you go international, you have almost unlimited options. You can, invest in bonds and securities, equities in the US and other parts of the world. And those mutual funds, balanced funds, meaning that it's both stocks and bonds, give our people an opportunity to invest and create financial wealth. If you look at the average person in the United States, they are invested in the stock market. 3 in 5 persons, 60% are. In our region, it's 1 in 25. In 2025, that is unacceptable. We have to change that fast. What we've also noticed is that some of our young people, as Nolan mentioned, have an appetite for it. Some of them are invested in cryptos. Some of them are doing the markets. Some of them are trading. But we have to give them additional tools, and we have to make sure it's broad-based. My challenge has been, and it remains now, and I'll stop after this, to create an app that makes it easier for people to do that on their phones. This is what I'm pushing for, the stock exchange, the ECCB, other players in the financial space. Create an app where people could do these things. People no longer want to go on our website and read questions, frequently asked questions. That was then. This is now. Give them an app so they could sign up, and that is what you're going to see some of this week and going forward. So much more to come on this question of investing, because further financial inclusion, as Nolan said, is the first step, access to credit, insurance, payment, but it's also investing. We have $27 billion in our banking system. And if I add the credit unions, it's a further, how much, Brother Keatley? Another 8 billion, whatever. So we have over 30 billion in the financials, easily in our financial system. A lot of it is savings, and we want to get more of our people actually investing.
So I want to just add a buffer. I think I would have faltered as a banker on this panel if I didn't add this. The banks have definitely been looking at our investment in technology. And we're not there yet, certainly not at the end of the road where we want to be. The governor has said it before, and I know the ECCB Banks Association is looking at it. We are certainly looking at our investment in technology, and that really is in an attempt to ensure that we appeal not only with our current services to the demographic who wants to come into the banking hall, but to the younger persons who want to avail themselves of the education, the ability to invest, the savings in a most convenient manner, and that is through the app. We're used to it. We have our technology right in our palm, and we're used to it every single day, and the banks recognize that. So that is the way that we want to appeal to the youth. I will say though, and that's why I said I will falter as a banker if I didn't have that, as the banks look at that, we have to look at the cost attached to it. We have to look at the cost attached to it.
So.
Yeah.
Right. All right, we're just going to take one last question from Facebook before we close off. It's a very important question. Does the first step account apply for opening a savings account for minors?
So I will speak to it while we are looking at this financial inclusion from a broad base, and we have milestones that we need to accomplish. The first step account was not catered for minors. It's for 18 years and over. But that does not mean that the work of this committee is over and that they're not being looked at. Simplified due diligence, which I think we've spoken on, is very, very critical. And the work has started, ensuring that licensed financial institutions can conduct that type of assessment on the persons to ensure that we now comfortable in saying, I can accept less information from you. If I'm able and I'm confident enough to conduct that assessment on that minor, why then do I need this extra information? That's where we need to go, and we are getting there.
All right, thank you very much for that explanation. Well, I think at this point we have to begin wrapping up because we've been here for quite some time. I know there are a lot of other questions that persons had to ask, but of course I believe in the coming days there'll be some form of public information to keep persons abreast of this new initiative. Well, again, another round of applause for the panel for really handling this topic very expertly tonight and for really addressing the questions as they came. We're at the point now where we're going to just begin wrapping up. So again, we want to thank the panel for being so professional in expressing and answering the questions that were brought forth tonight. And I'm sure this is not going to be the last we have this kind of interaction with the public.
No, we want to do this more, different ways of doing it. Could be in the community, could be. The reason why we did this link up is because as a central bank, we serve 8 countries, and we wanted to make sure all 8 member countries had a chance to hear from the panel this evening and pose their questions. So we had to rely on technology. I do want to say as we conclude, a high note of thanks to the working group, Nolan, Ron, Levia. These are passionate young professionals that have really worked really hard together in a collaborative way. And I'm really proud of what they've done and the way they've come together on this issue. And of course, as Ron said, there's more to come. So I want to join you, Mr. President, thank you for your own leadership of the Bankers Association. Banks don't always agree with the credit union, with the central bank, okay, as a regulator. But what we have is mutual respect. We understand that they run banks, they understand we supervise banks, and we have a role to play. And as I put it, we are partners in development. And that's what we've demonstrated here this evening, and that's what we've demonstrated in the collaboration that we've had. So I really want to just express on behalf of our central bank my heartfelt gratitude to all the members of the working group. You've done a stellar job so far. To whom much is given, much is required. And you know, busy people get more work. So that's what's going to happen to you. And to you, President Rolf, I want to thank you as well. Thank you very much.
Well, on that note, I think we could have brief closing remarks from each of the panelists. So Mr. Phillips, and then we go along the line.
Well, likewise, we certainly continue to foster the collaboration between the banking associations. As I said, the ECCB Bankers Association is an umbrella body that allows the central bank to not have to deal with 8 different associations or individual banks across the ECCU. We have representatives of all the banks and committees who will look at the challenges in the system, both from areas that we need to advance for the benefit of our customers and areas where we have hurdles that our customers experience, like this one that we need to overcome. And we certainly have a lot of dialogue around regulation, including the banking ombudsman, which the governor has eagerly talked about. But we have dialogue about regulation, and inevitably when the central bank wants to introduce new regulation, there's a period of consultation where we get together to see how we can understand the direction and how we can make this work for the banks and indeed for the publics. Banks are required, and banking is a very expensive business and becoming increasingly expensive as the cost of compliance with all standards all over the world continue to increase. But we are fully committed to this space and to making sure that we serve the public in our ECCU jurisdiction, and that we bring you financial services that are world-class and that can keep us at the cutting edge of what our people require in a world where you can see what's happening all across the world on a device in your hand, and you want to make sure that you are getting a similar experience to that.
In closing, I think I'd like to say that we are part of a currency union, and we don't always play well together. But this was one instance where the collaboration was at a level where I was extremely heartened to see. Every step of this process was iterative. So the committee would meet. There would be something that we would put forward, discuss, collaborate on. We would go back to Rolf's Bankers Association team, and we would share what the discussions were to date. There were times where we put forward things and they countered, and there were times where we would challenge to go back to the table. But I would like to say that at the end of the day, the commitment to fostering greater financial inclusion for our currency union stood at the forefront, and everyone maintained that as the objective and the goal, and this was to be the outcome. And so in looking at the first step account, that is the overarching goal. We want to continue to foster financial inclusion in our currency union. We want as many persons who would legally access the banking system and needs to do so to be able to do so.
ECCU First Step Account. I think, if anything, I want everybody to remember that name. First Step Account. This is the first step, not only for the persons who may avail to that account, but for our region. And I say that because when we thought about this, there was no intent on segregation. It was all inclusion, and it still is a message of inclusion. You may have your credit union account. You can also avail for a First Step account. This account will allow you to graduate in the financial sector and will also allow us to see our greater mission. We are looking at ease in payment processing, direct debits, some projects that the ECCB and the bankers are looking at, instant payments, our EFTs which are already in play. Accounts are needed to facilitate those types of transfers. While I don't think in any way the governor or anybody here is discouraging cash, what we want to say is that there are efficient ways of obtaining payments from persons that you may do business with, family, members, friends, and an account will facilitate that. So this is the first step to ensure that you're part of that wider movement. It makes it a lot more efficient for you to run your business. You don't have to go to the bus stop to collect cash for the cake that you did. It makes it a lot simpler, a lot more effective for our entire region. That is the goal. So remember this, it is the first step not only for you, but for our region.
Thank you very much. And before we close, I want to thank our audience, thank our audience who are listening on, the distinguished panelists here. And I'll keep my remarks very brief because I think the panelists would have captured all. This is the first step. We're talking about financial inclusion. And at no point are we going to leave anyone behind. The mantra at the end of the day is accessibility for all. And so we are driven by that to ensure that every person within our system have access to the formal financial system. This is where we can protect you as bankers, as regulators. And simply put, we have the ECCU First Step account, accessibility for all. We have achieved quite a bit. I remember Nolan would have indicated, we don't always come to the table willingly and we don't always achieve. But I think this is tantamount to what we can do together. And so I encourage persons to learn a little more about what the work of the working group is doing, what is the ECCU First Step account, and to remember, very simply put, let's get started.
And on that note, we are just about wrapping up this evening. Again, we want to thank the panelists for sharing and being able to share their expertise tonight on this very important subject. We also want to say a special thank you to the Antioch Baptist Church for hosting us this evening and being great hosts. At this time, I think there's supposed to be some presentations made to the panelists. Do they remain seated or do they go down? Okay, so we'll start. Ladies first.
We're very grateful for our panelists coming here and being part of this and the work that they have been doing with us. So as a token of appreciation from the Central Bank, Mrs. Nolan Gabriel, Governor, you will present. So I shall.
Chair of the working group.
Indeed. We have Mr. Raul Phillips, our ECCU Governor. Yes, we're working you this evening.
Mr. President, thank you for your leadership. More to come. Thank you very much.
And certainly our brother Ron Leo. He's co-chair of the working group, and of course we are very appreciative of the work that he's put in. Thank you.
And of course, yourself. No?
We are here to serve, as we have the governor's standing. So, Governor, we do have for Mr. Yui as well.
Oh.
He has done an excellent job this evening navigating the questions and ensuring that our discussions have been quite engaging throughout.
So Andrea is not just a moderator, but as you know, I believe he's the president of the Media Workers Association and the Federation. Andrea, pleasure to collaborate with you this evening. Thank you very much. So where is the gift for the buyer?
And one more, Governor, one more. And we could not have started the discussions without the opening prayer, and I think it set the tone for what came forward. So we do have a token of appreciation for Minister Amelia Gordon, if she's with us. No? So
Minister Philip?
Minister Philip can collect on her behalf, if that's possible.
Yes, Pastor. Thank you very much. Always to come to Antioch. So we thank you very much for coming.
Thank you, Governor.
Sorry, Andrea, I don't know. Levaya has done the good thing, the right thing. But there should be a gift for Levaya. And we'll make that happen when we get back to the office.
Thank
But
you, Governor.
Levaya has been our champion from within the bank in the working group. She's done an excellent job in this and on any assignment that she's given, because she's excellent, full stop. So thank you very much, Levaya.
Thank you, Governor.
Appreciate all that you do for the Central Bank and for the people of our region.
And on that note, I think we have gotten to the part of closure, and we'll close off this town hall meeting. Thank you so much for participating, those in the room and those who were joining us online as well. Of course, as the governor indicated, there will be more occasions like this as we continue to promote financial inclusion across the Eastern Caribbean Currency Union. Thank you so much for watching and viewing and listening and participating, and do have yourself a wonderful evening. I believe there will be refreshments available as well on the outside. So.